Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at oil. The CFDs on oil for WTI, West Texas Intermediate. Now, it's been a couple of weeks since I covered oil on YouTube. That's because last week oil was the exclusive for my Patreon only subscribers. But we're back on YouTube this week and we have a couple of counts to look at. A bearish one and a bullish one. Even the bearish one is only short-term bearish, long-term bullish. Both counts are very long-term bullish. But we're getting to a point now where we're going to probably have to count this bearish count out pretty soon. We're getting very close to the invalidation point. But a quick reminder of what this count is built around. It's different from the other count we're going to look at later. This is working on the idea that from zero, because we made it to zero in the futures market, we came up in a cycle wave 1, which brought us to the top in August last year. Then we had this zigzag correction, not particularly deep, into a wave 2, bottoming in the around Halloween. I think it was actually the week of the 2nd of November. And then we're now up in a wave 3 heading higher, and we've so far completed the wave 1 and are working on the wave 2 of this primary degree into our big wave 3. Now, like I said, this count is getting close to being invalidated in the short term. The 2 probably isn't anywhere near that far out, but either way, we're going to come in now and work our way up to this count here into primary degree, where I'm saying we have 5 intermediate waves up, like so, into our 5th intermediate wave, into our primary. And it's the short-term price action over the last few weeks that we really need to keep an eye on and look at. So let's quickly get through this, because what we're going to do today, as unfortunately I've had pretty limited time this week to update all my charts. My little girl has unfortunately been covered head to toe in chicken pox, and she's coping well, bless her. And I think she's through the worst of it now, so I'm now trying to play catch up. But so what we're going to do for a little exercise is we're going to actually spend some time on the bullish count, and we're going to look through our options live, and I'm going to count you through them. So we may take a little bit longer than usual in this video. So quick interpretation of the bearish count here. So what I'm going to do is I'm just going to bring up some alternate colours that we're going to use for Elliott wave count, just to cover what I was saying I thought was going to happen before. Now, the overall idea in the previous video was for an ABC like this. That hasn't changed, except how I was counting it has changed somewhat. So what we're going to do is we're just going to come down to 2 hours so we can get a bit more detail on the chart here. So I was saying 5 waves down into an A, and then I was making this into a 3-wave structure. A, B, that's the same. However, I was then counting our way up into the C, into here. So we went A, B, C into an A, into a B, and then I was calling for a 1, 2, 3, 4, 5 into the C. And then I said we had what looked like a diagonal forming into a 1. This is last week's video on Patreon. The week before I was saying that this top here was looking like this was complete and this was going to be a 1 down, 2 up. And then unfortunately we came down in that what I thought was a diagonal, sorry, let me just show you. So down to here, into a 2, below this high, then I thought we were about to let rip in a 3. Well, that never happened. What we actually did was come down in what looked like a diagonal, back up in what looked like a 2, down in what looked like the start of a 3, and then we came up and invalidated this high at 66.724. So this count was no longer valid, and then it starts to get really tricky as to figure out how in the hell we set a new high, stay below the invalidation point and still remain bearish. It's very difficult. So the best I've been able to come up with, and it's very close to going wrong, it could still technically be right, and that is the idea that we are working still inside of a B wave, this wave here, and we're doing a double combination like this. 3 waves into a W, a zigzag down into the X here, this is the flat here, and then we're going into another one, A, B, C to here, which just takes us to a new high, and then we're going to roll over now into a C. Now, honestly, I'm not favouring this anymore. It's stretching the bounds of what's reasonable. It is still technically possible, but if we look at how much we've retraced since the high to the low here. We've come right up to 90% and we've double topped into the 90%. This does keep this bearish count alive. Here's the 89% fib retracement, this like kind of pinky purpley line here. And we've come up to the, what was this, 66.724 was initially the invalidation point for this 1-2 down. So we can take that off the chart. It's not really relevant anymore. The only thing that's relevant now is this number up here, around 67.895 or whatever it is. It's basically the previous high. If we take out the previous high and continue to move higher, then this bearish interpretation is wrong, and we have to consider the bullish alternative, which could ironically have us making another high before coming back down. We're going to discuss all of those options in a minute. I'm just having a quick sip of my coffee. Lifeblood. Right, there we go. So anyway, we are still trading inside of this channel. So all you need to think about if you want to be bearish, or if you are bearish or leaning into this count, is the invalidation point, which is the previous high. I make it out at 67.9 essentially. Should we say 67.9? If we go through that, take out the previous high, we have to interpret this differently. This is the best I can do bearishly at the moment. Like I said, it was counting quite nicely until we made a new high just today, basically in the last few hours, and it's made it basically made this count impossible for the moment. So not the overall count, but the count I had going down into a 1-2, 1-2 obviously has been cancelled out, so we just need to keep an eye on that high. So now let's come over and have a look at a different count, a more bullish interpretation, much more bullish interpretation, which suggests we haven't even completed cycle wave 1. So off of the low, I'm saying we're in primary wave degree. We've done a 1, 2, now we're looking for a 3, 4, and then 5 that we're in now. 5 started, or it hasn't. That's what we're going to come in now and discuss. Now, the count up to here is the same as the previous one. It's just where this has changed slightly to make this a primary wave 3. So we've gone 1-2 with our cycle wave. The count is the same 1-2, but instead of saying 1-2 here, we've gone 1-2 continuing the primary degree, 3, 4 instead of 1-2, 1-2 cycle into primary. We've kept with the primary wave degree and gone 1, 2, 3, 4, but everything subdivisionally counts the same. So we're now going to zoom in and into this empty bit of chart. We're going to try and look at our options here to see what fits. So you'll have to bear with me because I stripped this chart down, created a copy to put a bullish interpretation on this to try and figure out what the hell's going on. Alright, so okay, so let's think about our options first. Let's just put in place our high so that we've got a nice clear line that we know we're dealing with, that we can say is our high. We'll put this in white and we will lock it in place so it doesn't move. So we've had a move down. Duh. Brilliant. And it kind of looks at first glance like 5 waves, which is how we got into our bearish interpretation of a zigzag. 5, 3, 5. Well, we've already covered that count and we know that the invalidation point is the previous high, so how are we going to interpret this bullishly? Well, the first thing is we've got this downward trend line, right? And it is really strong. Resistance here, resistance here, resistance here. You can see how it's basically following, coming up, testing it, coming up, testing it, coming up, testing it, and it's quite a dominant trend line. We also have a series of higher lows here. Okay, low, higher low, higher low, higher low. Excuse me. So what we could do, if we were feeling really flexible with our Elliott wave interpretation, is we could say zigzag 5 in here, 3 in here, 5 in here into an A. 3 wave swing into a B. 3 wave swing into a C. 3 wave swing into a D, into an E, and our forward's complete. Here and now we're impulsing 1, 2, 3, 4. Perhaps this is a diagonal, since it does look like the third wave here does divide as an impulse, and a flat and a zigzag likely. So this could be 1, 2, 3, 4, 5, or this could be 1, 2, 1, 2, either way. So that's one way of looking at it, and I don't like it, to be absolutely honest with you. This does not look like a triangle in any way, shape, or form. It is legal if you somehow get this into a zigzag, which is not easy, but we have to count it as free if we're going to start with a bearish count. Sorry, if we're going to have a bullish way out of here, sorry, into a way forward to complete to move higher, we need to try and interpret this move as 3 rather than 5, because we've already interpreted it as 5 in our bearish count, which suggests we're coming up below this high, so in a zigzag before we go lower. While we're not, whole point of having this bullish interpretation is not to look at it that way, so we're going to look at it as a zigzag into an A, B, C, D, E triangle. That's one option. Not a fan. So for the moment, I'm going to scrub that as I'm not happy with it. So we're going to move the 4 out, and we're going to have a think about how the price action looks off of the low. Okay, so we already know that we can interpret this because of our because of our bearish count. We can interpret this as a W, X, Y. Okay, but we've got a 3 wave move here, 3 wave move here, 3 wave move here into a WXY. So in that case, that would suggest that the 4 isn't complete yet. That we've gone A, B, C. So this is the same idea as the bearish count, except instead of going 1, 2, we're just going 3, 4. Right? So we don't need this either, do we? Because we can just slap a 3 here and a 4 here on the bearish count and say, yeah, it's going lower, but it's a 3, 4 instead of a 1, 2. So this isn't much use to us either. So, okay, so we're going to get rid of that corrective idea. So we want the 4 to finish sooner, is what we're saying. Or we want the 4 to finish later, but in a different pattern. So, what other options are left? Let's just remove this fib channel for the minute, as it's distracting me. So, we have this upward trending movement here. So we can maybe, if we are going to count this as a 3 wave move, whether it's a 3 wave into an A of a triangle, B, C, D, E, all messed up, or we're not going to count it as 5. So let's just say A, B, C, okay? And say, you have to use your imagination, 1, 2, 3, 4, 5. And diagonal, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. So we've got a zigzag. It's a funky looking one with an extension in the C, but it's a zigzag. It's a 3 wave move, 5, 3, 5, like that. So let's just zoom in to the 1 hour and see if we can make any sense of the initial downward move as 5 waves. Alright, otherwise we're just BSing ourselves, aren't we? So yes, there is a blip. There's a blip on the radar, a green candle in amongst here, and you could say there's subdivision in the 3 here. Like I said, expanding flat here. Use your imagination again, it is there. Let's just show A, B, C. Now this will be coming down to minute. And this will be coming down to minuet with it, because we're going into intermediate A. So this is primary 3 into an intermediate A. So then the A, B, C we're suggesting here. Hang on, gotten lost. Oh yeah, we're on a smaller scale, aren't we? A, B, C, that's right. So that would be minor. Excuse me. Right, like I said, this is going on a little bit longer than it usually would. We don't tend to do this very often on the channel, but it's a nice exercise once in a while to show how we try and figure stuff out when things are not clear. And I can timestamp the video if I need to. We'll see if I need to. I'll try not to be too much longer. 1, 2, 3, 4, 5 minute inside of the minor minuet. So what am I saying here? That's the inside correction of the 4. And then there's somehow 5 waves down into here. We're just going to have to give ourselves the benefit of the doubt there. And we're going to have to say 1, 2, 3, 4, 5 diagonal into a 1, into a 2, 3, 4, 5, C. Okay. Alright. That's it, yes. So let me get this straight. 5. Sorry. You'll have to bear with me. I'm just getting. I've lost my sense of scale now. Let me get my head back in the game here. So let me get this straight. We're saying zigzag A, B, C on the minor time frame into an intermediate A. Let me just get that on the table. We might end up here with something very similar. No, that's not right. Sorry. This is intermediate, you plonker. And we're moving the forward here. We're saying this is a quick, sudden zigzag. That's what we're going to say. So A, B, C. So then this becomes minor. Since I'm going to be ending up saving this chart, I do need to get the labeling correct. Okay, let's just move that out of the way, because it's just confusing me. This becomes minor. 5 waves down into an intermediate A. 3 waves in here into an intermediate B. And this goes up to minute. Okay, and then the next wave goes down, goes up to minor degree. Okay, so here's a solution. We have a zigzag. It's not traditionally very normal. A, B, 5 waves in a C, bit of an extension in the C here. So let's just go 1, 2, double click. That's it. And let's have a look at this extension here and see if it makes any sense. So from the high to the A to the B, here's the 1618. We tag it on this initial move down, and then we go through it and end up kind of in no man's land. Yeah, nothing pretty. What do we retrace overall of this third wave movement up? That's another thing we need to look at. Bottom of the 2, top of the 3. In between the 23.6 and the 38.2, it's kind of half-assing everything. It's like half-ass in the C extension, it's half-ass in the overall retracement. It's enough to be a 4 because it's gone through the 23.6. It's not enough to be convincing and make it to the next fib channel. It's just kind of floating. We've done enough for it to be a 4, and we've got a zigzag, which is enough to count it as a 4, but we just don't like how it looks. Sometimes that's just the best you can do. So from here, we need to get our ass off of a 4 and up to a new high. So the easiest thing to do, what's this, a 1, 2, 3, 4, 5, 1, 2, 3, 4 overlap, 3, 4 overlap. So really, if you want to dig your way out of here, you're going to have to go 1, 2, 3, 4, 5. Then you're going to have to go 1, 2, 3, 4, 5. And this will be the minor. The first one will be the intermediate. 1, 2, 1, 2. This is an overlap as well. 1, 2, 3, 4. Divides as an impulse. So label it again. Zigzag here. Is that low below that low? Yes, it is. 2, 3, 4, 5. Don't really like doing this in the 5th wave because, you know, this is just building up the extension in the 5th wave, whereas really we should have already seen most of that in the wave 3. 1, 2, 3, 4, 5. Can't get a 3, 4 on minute time frame, so once again we've got to go 1, 2, 3, 4, 5 minuet. Dun, dun, dun. And say that this is just going to be some kind of gigantic inflationary blow off top in commodities and oil. That's the only way we could really express what's happening here. It's not impossible. Okay, so there you go. That's the best I can do if I want the 4 to finish as a zigzag. Bump, 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 like that. And then I've got to go 1, 2, 1, 2, 1, 2, 1, 2. We should now, on minuet level, get our backsides above this high into an impulse wave 3, 4, where we don't overlap into a 5 to start applying all of this labeling. Okay, and that's the best we can do at the moment, bullishly. Let's look at one more alternative before we go and wrap things up then. This could be an Uber extension in a wave 5, right? So we'd have to say, right, we've got to accommodate minute, minute, minor, intermediate, into primary, so we can just push the wave 5 target way higher, and we're just going to go off into some kind of commodities blow off top. We've seen it in lumber, we're seeing it in copper, maybe oil's about to just go completely mental as well and blow off. It's possible. This wave extension suggests that's what would happen. A continuing build-up of ones and twos on ever decreasing wave degrees. So that's one way of looking at it. So let's look at the last idea. I've just been looking at the chart while I've been talking at you, and this is, as long as we don't set another high, we could just say it's going to be a long, drawn-out triangle. Okay, so the reason this is possible is we've established a free wave count. Okay, so we've established a free wave count from our proposed primary free. It's not pretty. 5 ways fits it better, but we've already spoken about 5 ways. We have to turn down now in the bearish condition, in the bearish count, but without making a new high in order to justify 5 ways, because we can't have a 5 wave corrective structure that goes to a new high in the B wave, because then it's no longer a zigzag, and it's 5-3-5 counts as a zigzag. Any other move would have to be 3 ways, 5 ways to get an expanding flat above the high. That's really our only other option, but I can't see the division in the B wave unless we use that WXY. Okay, so if we do break a new high, I'll have to come back to oil and say either this bullish count fits it, or we need to interpret one more additional way of looking at things. But let's finish off this triangle. 1, 2, 3. Then the WXY we've been using from our bearish count to get the A, B, then some kind of 3 wave move down again, some kind of 3 wave move up again, 3 wave move down again, and then off. Okay, it's like this is trying to look into a crystal ball really when you're trying to predict such a large move over a large period of time. But we'd be saying A, B, C, D, E, and then off you go. Bullish, 3, 4, big move up in the 5, continuing rising lower trend line, low, higher low, higher low, higher low, contracting downward trend line, high, lower high, till it breaks. Alright then guys, I'm going to have to call it there for the Elliott wave count. Let's quickly wrap up with our basic technical analysis. So we're just going to save, we've already saved the chart, we're going to clear the Elliott wave count. I wish I could be more clear, but until we see that new high, we are kind of in no man's land at the moment, so maybe another update next week would be useful. Let's come back to the weekly time frame, and we are going to zoom all the way in. Excuse me. And we are going to bring up our 10 exponential moving average in yellow, our 20 exponential moving average in, that should be darker blue. Got that in turquoise. Okay, in blue, our 60 exponential average in orange, and our 250 exponential moving average in green. Weekly time frame, it's just looking really bullish, uber bullish. We went from uber bearish to 0, and then we dragged ourselves above the 10 exponential, above the 20, bringing the 10 with it, above the 60, bringing the 10 and the 20 with it, above the 250, bringing the 10, the 20, and not yet the 60 with it. But if we do get a crossover of the 60 over the 250 with the price above it, that would be very bullish. Now let's bring up our other indicators. Here we've got our MACD set to a 10 for the short-term moving average in blue and a 20 for the long-term moving average in orange. And then we've got our RSI set to a 10 close with the green 30 level representing oversold and the red 70 level representing overbought. What do we see here on the weekly time frame? We see this bearish period of consolidation. I have no idea why it's done this again, but for some reason it's got my colours reversed for my light and dark colours. Okay, there we go. Save as default. Now let's see if it memorizes it this time. TradingView's indicators have very short memories. They just seem to revert to default sometimes or forget what you've saved. Anyway, getting back to it. Short-term bearish consolidation here. Darker red candles giving way to lighter red candles, reducing in size. Potentially setting up for a bullish move. A short-term time frame crossing over the long-term moving average here. Possibly. Hasn't done it yet though. So no confirmation yet. Now the RSI has a big peak here around 85 on the RSI, which was our peak of the week of the 8th of March, and we've since come down from overbought conditions back into overbought conditions. If that bearish count is right, and it hasn't been invalidated yet because we haven't made a new high, and it were to roll over violently today or the rest of this week, it's only Tuesday after all, and we were to get a red candle in here, then this would be, you know, a pretty strong indication that we've had a breakdown in momentum. High and a lower high. However, there is also the argument that if we break through to new highs and start to impulse up, then we could keep going and going and going and going in price and potentially be setting up a bearish divergence on the long time frame, on the weekly time frame, where we will not make it back up to 85 in the RSI. We'll set a lower high in the weeks or month or so to come, and we'll do the same in the MACD, and that would be the top. We'd have a bearish divergence to confirm it, and then we can say, right, fifth wave's in, now that's a wave one, now it's time to correct into a big correction. But that's all speculation, that's all hearsay. For the moment, bullish on the moving averages, a little bearish on the MACD and the RSI, but that could change quickly. Let's come down to the day time frame and see how things look. Wakey chart, come on. Right, someone's stealing my bandwidth. Okay, so where are we? Above the 10, above the 20, above the 60, above the 250. We tested the 60 on the exponential 60 exponential average on the daily time frame here. Very strong support. Several 1, 2, 3, 4, multiple candles down here, all finding support on it. No crossover of the short-term moving averages over the 60. Price still above. Just coming into this double topping pattern. Like I said, we need some kind of decisive move up or decisive move down to confirm one of our counts. Same coiling kind of pattern going on in the MACD here. We've got bullish and bearish mix here, mostly bullish as we come off of this move down. Lowest, considerably lower reading in the RSI, although we're right near the previous high in price. Upward trending price action though, upward trending momentum, bit of a breakdown here. See, we have divergence on the short time frame between the high on the 4th of May, or should I say 5th of May, and the high here on the 17th of May, or 18th actually today. We've set a high and a higher high, but we set a high and a lower high in the RSI. So, very neutral at the moment. I mean, close to making a decision either way is how it feels. So, we've got very little room left. Very little room left. So, to sum up, very simply, if we see a new high, then there's only two options. We're impulsing higher in a fifth wave, or we have to come back and recount this as some kind of expanding flat that we haven't considered. But I would lean into the idea that we're building up those multiple sub wave degrees of an extension in the fifth wave, going 1, 2, 1, 2, 1, 2, and we should get a break up into a 3 on the smallest time frame, the minute into the minuet into the minute, and then we should start to accelerate into the 3 of the minute time frame, 4, then in the 3 of the minor time frame, 4, and then the 3 of the intermediate time frame, 4, 5 top in the primary, cycle wave 1 done. That's how it should go if we're bullish and we break to new highs. If we fall down from here, then the bearish count is still alive, and the bearish invalidation point is 67.9. We're saying if we turn over and fall, and we are starting to fall today, if we break down violently from here, then we've just put in a very deep 2, or a very deep B, sorry I should say, because we're saying that we've come down in this A, we're coming up into this B, and then we're going to have 5 waves down in the C. I'm going to have to leave it there, guys. I've waffled way more than I normally would on an oil video. I hope you've enjoyed it. If you're new to the channel and you like what you've seen, please subscribe, smash the like, leave us a comment in the comment section below if you want to. Hit the little bell notification icon to remain informed of future video releases. Thank you as always to my Patreons. Your support is greatly appreciated. If you're interested in becoming a patron or you want to see what's on offer given the different tiers, there's a link to my Patreon in the description below. There's also a link to my Twitter feed in the description box below. If you're not following me yet, head over and do so. Alright guys, take care and I'll be back with you shortly. All the best. Bye bye.